It was another good day for the Australian share market with a rise of 0.7%. Domestically, we saw job numbers out with 31,900 jobs being added for the month of January. That beat expectations of 15,000 jobs having been added. We also saw economist Bill Evans from Westpac predicting that the RBA will be forced to cut rates by 2 times this year. That also had an impact on the Aussie dollar, which fell on the update. And we saw Reuters reporting that the US and China were drafting pacts for a possible trade deal. And that helped markets around the region, including here in Australia. Of course, half-year earnings season also impacting heavily on stock prices. We saw Webjet having a stellar day with shares rising by 30% after its result. We saw a record total transaction value, revenue and EBITDA number. In fact, revenue was up by 33%, earnings rose by 30% and net profit was up by 37%. Also great days for Fisher & Paykel as well as Lifestyle Communities and Nine Entertainment, all reporting earnings and all up by 7% on the market. Wesfarmers shareholders would be happy today with a special dividend being declared, the shares rising 7% on the back of a record first half result. It looks like that decision to spin off Coles was the right one for Wesfarmers shareholders. No guidance was given, but that was expected by the market. We also saw Star up by 5.7%, and we did see a decline in VIP turnover, but profit was up by 2.4%, and that helped shares on the market today. Accent up by 5%. We saw net profit up by 27%, gross margins up by 280 basis points. The outlook also strong with the first 7 weeks of the financial year seeing same-store sales up by 2.5%, and the gross margin also continuing to grow. On the downside though, Event was down by 5%, normalised profit only up by 1.9% there. We also saw Mineral Resources coming under pressure, the shares down by 5%. It reported first half EBITDA on a normalised basis, down by 59%. It says that it still remains on track to reach its full year guidance for EBITDA between $280 to $320 million. But with the first half normalised EBITDA coming in at $102 million, it means there's going to have to be some heavy lifting in the second half of the year. So all in all, a great day for the Australian share market, helped boosted by those calls for rate cuts here in Australia, as well as that Reuters report that the US and China are close to a trade deal.